Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm gonna bring you an update on the previous analysis that I did on Microsoft, okay? Because it came out earnings the last week, so 1 week ago, and I went through some numbers and I want to show you a view which is the bull case for Microsoft, okay? So I want to show you some numbers and a couple of models and also try to give you a possible price target for 2024 if this scenario, this bull case scenario happens. So as always, the only thing I ask you is please leave me an early like. It will be very appreciated. You help me to reach more people and to grow the channel. So it doesn't cost you anything, and if you do it, thank you. And subscribe to the channel. And let's begin. So the last week, that's what we had. The press release of the earnings of the period ended in June 30, 2020. Overall, Microsoft grew by 13% in earnings, but it's very interesting to see how the three categories, so revenues in productivity and business process, increased 6%. Revenue in intelligent cloud, so Microsoft Azure, increased 17%. This is mainly driven by Azure revenue growth of 47%, okay, so comparing with the previous period. While the revenue in more personal computing was 12.9 billion and increased 14%. That is mainly driven by Xbox contents and services, which increased 65%. Now, here the thing is, do you think that this is something that consistently happen every quarter? I don't think so, okay? We had the pandemic, more people at home, so of course you have to pass time. So the sales of this kind of stuff increased a lot, okay? But I'm not expecting to see these kind of things every time. While I am very interested in the cloud business, and everyone is, okay? Now, I already told you in the previous video that the cloud can be and will be a huge part of the future of Microsoft, okay? So depending on how the cloud business goes, well, also Microsoft stock price will go as well, okay? So, and that's why I'm doing this update today to the previous analysis, because I'm going to present you a bull case based on the fact that Microsoft Azure, so the cloud business, will become a bigger division in terms of business for Microsoft compared to the other two, okay? And what that means for the entire business. So let's go to see. Now, to understand how that will impact and could impact Microsoft, first of all, I already showed you the operating margins in the previous video. And to understand how this bull case scenario can happen, we have to talk a little bit about margins. Because here we have, since 2014, the operating margins for the divisions, okay? So the gray one here is more personal computing. The blue one here is productivity and business process, while the orange is the cloud, okay? The cloud business. Now, we have until 2019, this is the real data, okay? Until here. And we can see how productivity and business process started up to 52.54% and then decreased. And then in 2018 we had a bounce back, but overall it's below 40%. While the cloud, it has been pretty constant and consistent during the last 4 or 5 years, because from 2014 started at 38.86, and then we are going to 41, 37. Anyway, it looks like that we are stabilizing. 2018 and 2019, they were pretty similar, okay? Around 35% in operating margin for the cloud. While my personal computing started pretty low and then tried to reach out the others, okay? In 2019, they were 28.05%. Now, For this model, for this analysis, I am assuming that the company, which is already huge, is going through maturity. Then these kind of margins, they are gonna somewhat just go next to each other, okay, like you see here. I'm expecting a little bit of stability. Okay, you see they tried to all came up around similar levels, and I am expecting to see the cloud business pretty stable above 35%, and that's important. Okay, the more important part here is the orange line, and to see how the orange line is above the gray one, which is my personal computing. And overall, the blue one is not bad as well. Now, for the next step, we have these one are the business categories in 2019. So it's the division of how Microsoft made money in 2019 in terms of revenues. So 31% is the smallest and is the cloud business, while 33% is productivity and business process, while 36 is my personal computing. We see that my personal computing in 2019 is the biggest slice in the cake, and the smallest one is the cloud business. Now, as I showed you here, we see that actually the cloud business is the one that is growing at the fastest rate. And this is expected to continue for the next few years. What that means is that the cloud business can grow its slice in the cake. And that it was the bull case is about. It's about Microsoft Azure that will drive overall the Microsoft business. And let's see what that means. Now, here you have an estimates. Okay, so 2019, this is real data. We have this one, and it's the one you just saw in the cake. So 36% in my personal computing, 32% in productivity, and 30.98% in the cloud. And those one are the next 4 years estimates, and I am assuming that the cloud will grow faster comparing with the others. So what that means is that we will see a kind of overtake for the cloud in the overall picture, okay, in the total revenues. To go to 2024, well, the total revenues will be at 40% from the cloud, okay? So we started with 30.98, and 2024, 40% for the cloud, 33.80% for productivity and business process, and 26.20% for my personal computing. That, as I showed you in the previous analysis, is the division that it's less growing comparing with the others, and it's less consistent. It's more of unpredictable, okay? While the other two are growing consistently. So this doesn't mean that my personal computing is gonna decrease in revenues. This means that the ratio is gonna decrease. So my personal computing will continue to grow as well, but at a lower rate comparing with the cloud, so that the cloud will overtake it. Okay, and take a biggest slice in the cake. And that was also a lot of analysts are expecting. And we have to understand how this will impact Microsoft business. So this is the new cake in 2024. That's what this model is about. You're expecting a 40% in the cloud. So you see how the cake is different. 26% in my personal computing, and 34% in productivity and business process. Now, the calculations. Basically here I took the historical operating margins as the graph I showed you before, and then I have the estimates, okay, for the next 4-5 years for all the divisions. Together with it, I have the cake divisions, okay, so the one I just showed you, and also the estimates for the next 5 years. So to arrive in 2024, as I told you, with a 40% cloud. And now, to how do we calculate the margin, the net margins, which is the one that we care about for the model? Basically, we just take year by year. For example, for 2024, you go there and you take the cloud 36.15%, and those are the estimates in operating margins, which are the one I just show you here. Okay, basically I told you that it's going through maturity and they're gonna be pretty stable. Okay, that's what the assumption of the model. So 2024, 36.15. That's the number I show you in the table. Here we have 36.15%. You take this one and you multiply it by the piece in the cake that the cloud will have, 40%. And you do the same with the other divisions, okay? So this one times 33.80, and then we have 31.50 times this one. So that's what it is. Overall, you just sum and add all of them up and you get 36.17, which is the total operating margins estimated for 2024. Then, once you have this one, you need the net margins. So you have to deduct for taxes, which is usually 21%, and also interests payments, okay? So I deducted a 24% total from the operating margins to have the net margin, 27.49% in 2024, okay? So that's the result of all of these calculations. Basically, when I'm going to do the valuation right now, in the previous valuation, I just took an average of the margins, the net margins of Microsoft in the last 5 years. While this valuation in the bull case is assuming that Microsoft will continue to improve the net margins with the cloud business. So because of Microsoft Azure. So that's the result. In 2020, going up. Net margins will go up until 2024. So from around 26.40 to 27.40. And let's see now in the valuation what that means and how that changes the previous analysis. Now here we have the previous analysis, and I'm not gonna go through all of it because the video is gonna get too long. Go to see the previous one where I explain what it is about. Anyway, just the difference with the previous one is that here I took an average in the previous one of the net margins, and that average is 22.17%. While in that new one, I'm taking the net margins from the bull case scenario, okay? So with the cloud business that takes over the other divisions, and overall Microsoft will be able to improve the margins. And let's see what we get. As always, I start 4 scenarios, 8%, 10%, 12%, and 14% growth scenarios. The requirements are still the same as the previous one, 8.5 in discount rate and 3% in perpetual growth. And let's see what we have. 8% scenario, we get today's company valuation of 1 trillion point 4, almost 1.395, and divided by the total amount of shares outstanding, we get a fair price today of $184.05 per share. While in the 10% scenario, we get a fair price today of 193.15. With the 12% scenario, we get a fair price of $202.59 per share. And with the 14% scenario, so a decent growth rate, very positive scenario, we get a fair price today for Microsoft of $213.76 per share. Okay, so overall, we take an average of all of them, and we get a fair price today for Microsoft of $198.39 per share. Now, you see that this one is very similar to the price we are having in the market right now, which is around 200. And so it looks like that the market is kind of expecting this bull case scenario, is pricing the fact that the cloud will overtake the other businesses and that overall Microsoft will enhance their net margins. Okay, so this is explaining you the price today in the stock market. Now, as promised, I want to show you with the 14% growth scenario a kind of a price target that if that happens, we could expect from Microsoft. The average PE ratio in the last 5 years for Microsoft has been 31. Now it's around 35, anyway, has been 31. And with the 14% scenario and the margins that I estimated, basically what we get is a net income in 2024 of $63.78 billion for Microsoft. So what we do, we take this one and we multiply it by the average P ratio, okay, that I am assuming to be a little bit conservative, that in 2024 the P ratio is gonna be 31. So what we get is a total market cap which is around $2 trillion. So $1.97 trillion for Microsoft in 2024. And so when we divide this by the total amount of shares outstanding, considering also a little bit of buybacks that Microsoft has always made during the last years, because you see those are the shares outstanding for Microsoft, and it's a constant decreasing downtrend, okay? It's a negative trend, which is positive for investors because it means that the number of shares are always getting smaller and smaller, and so the price always goes up. Okay, so I am assuming also this trend when you take the market cap divided by the total amount of shares outstanding in 2024, which I said there are gonna be 7.1 billion shares, I get a price of $278.50 per share in 2024 for Microsoft. Meaning that if you buy at the fair price, this is gonna be, could be, a 9% return every single year for the next 4 years on Microsoft, giving you a total return of 40.38. So that is what we could expect from Microsoft in the growth scenario, okay? So a future price, target price, that considering the fact that also the company always surprises the market overall with earnings and stuff like that, this could be conservative in this kind of scenario, okay? So why not? It could reach $300 per share by 2024. If this thing with the Microsoft Azure and cloud happens, okay? So not telling you this is gonna happen. As always, as analysts, we do estimates and we do scenarios. So you have the previous analysis, which is a conservative scenarios analysis as with averages and stuff like that. And then here we have the bull case. And it looks like that the market is pricing the bull case right now. Overall, guys, I would not buy Microsoft at these prices because with my rules and how I invest, I like to get a margins, okay? A margin of safety. So for me right now, Microsoft price is too high and I would like to see it lower. Anyway, with this analysis, you have actually the price explained in the market. So depending on what do you believe, you have that with the previous one, Microsoft is overvalued, while with this one, Microsoft is at fair price, if you believe in the bull case. Overall, guys, I hope you find this video interesting and leave me a like and leave me a comment below. Tell me which scenario do you think is more likely to happen. Subscribe to the channel and as always, have a wonderful day.